Welcome to this week's market drama. We'll begin with the S&P 500, which was down 1% for the week. It is now up 21.8% for the year. NASDAQ did much better. It was up 0.2% for the week. It is now up 23.4% for the year. And there's two major reasons as to why the indices had such different performance. First one is earnings, right? There was a number of technology stocks that reported that did better than expected, and NASDAQ tends to be much more tilted towards technology stocks. The second one is that treasury yields have been rising, and the S&P 500 has more exposure to sectors like, for instance, like industrials that tend to have a tilt towards or be more sensitive to interest rates rising. So why are rates rising, right? Both the short-term and long-term rates have been going up. The yield of the 10-year Treasury note closed at 4.24 on Friday, up from 4.07 at the end of the previous week. That's a pretty big jump. And not that long ago in September, it was at 3.6, right? So rates have been going up. Now, some reasons might be good. So one of them is that economic data has been better than expected. So as the economy is essentially not showing signs of heading into a recession, rates tend to rise with economic growth projections, if you will. And the other one is not necessarily so good, is that inflation has been remained a little bit stickier than expected. That also puts pressure on yields. And then the third one is that we do have an election coming that does tend to create volatility in the short term, not only in the stock market, but in the treasury market. So that is it for this week. Next week, we have a couple big items when it comes to economic data. We have PCE inflation data, which is key to give us a sense of the broader picture of inflation. And we also have non-farm payrolls report for October. That's a big one. We also have the initial estimate of the third quarter GDP on Wednesday. All of those will give us a better picture of how the economy is faring. That is it for this week. Stay tuned for next week.